Are the big players making moves you're not seeing? A new Wintermute report shows institutions are sticking to Bitcoin and Ethereum, while regular traders are chasing the next big altcoin narrative. This split is happening as we see a massive cash rotation from Bitcoin to Ethereum, with even Donald Trump adding another $23 million in ETH to his holdings. Some analysts say this is a classic sign of the bull run's final stage and that a huge altcoin season is just around the corner. All of this is happening before the new spot Ether ETFs have even started trading in the US. With talk of crypto-backed mortgages and a $15,000 Ether, are you positioned for what comes next? In the latest video from the Crypto Rover channel, he argues that the current Bitcoin bull run is entering its final stage, following a pattern similar to previous cycles. He doesn't think this time is any different. He's looking at a Bitcoin top between $130,000 and $140,000. A big part of his reasoning is the major shift of money from Bitcoin to Ethereum, which he says is a classic sign of a late-stage bull market. This is backed by recent data showing Bitcoin ETFs had $68 million in outflows, while Ethereum ETFs saw a massive $533 million in inflows. This rotation suggests the start of a big altcoin season, where he expects altcoins to perform very well over the next couple of months. He mentions he has $7 million in open positions on Bitcoin, Ethereum, Dogecoin, Cardano, and Pepe to capitalize on this shift. For Ethereum specifically, he's targeting a price of around $4,100. He also points out that Donald Trump recently bought another $23 million worth of Ethereum, adding to the interesting market dynamics. The idea of a capital rotation from Bitcoin to Ethereum and other altcoins makes a lot of sense right now. It's not just market speculation. It's tied to real events like the approval of spot Ether ETFs. This has given big institutional money a clear, regulated path into Ethereum, which could explain the inflow and outflow numbers mentioned in the video. When you see hundreds of millions flowing into ETH products while money trickles out of Bitcoin products, it's a strong signal of shifting interest. The altcoin season narrative feels a bit more solid this time because it isn't just built on retail excitement. It has a foundation in these new financial products that open the doors for a different class of investor. It seems the market is developing more predictable patterns, where Bitcoin leads the charge and then passes the baton to Ethereum and other alts for the final leg of the race. In the latest video from Lark Davis, he argues that despite a small market pullback, the foundation for a massive crypto run is stronger than ever. He points to huge macroeconomic developments, like a new $550 billion trade deal between the US and Japan, as a very positive sign. Lark feels the arguments against a bull market are disappearing, even with expected short-term dips. It's hard to disagree with the general excitement in the video. What's interesting is that most of the bullish news Lark talks about, especially for Ethereum, is based on events that are still unfolding. The demand shock for ETH is happening even before the spot Ether ETFs have started trading in the US. The SEC has approved them, but the final paperwork isn't done. When those products go live, the institutional buying pressure he's describing could multiply significantly. It feels like this market cycle has a different flavor, with institutional and even political forces aligning in a way we haven't seen before. The current price action seems to be reacting to the anticipation of these huge capital inflows, not the inflows themselves, which could mean the real move is yet to come. In the latest video from Coin Bureau, Nick walks through a new report from Wintermute that shows how big money is moving in the crypto over-the-counter (OTC) market. The report, covering the first half of 2025, reveals a major split in how institutions and retail investors are approaching crypto. Institutions are doubling down on the big names like Bitcoin and Ethereum. Meanwhile, retail traders are the ones pushing into the wider world of altcoins. The video's breakdown of the fictional Wintermute report for 2025 paints a picture that feels very familiar in today's market. The split between institutional and retail interest is a real and growing trend. We're seeing massive firms like BlackRock and Fidelity focus almost exclusively on Bitcoin and Ethereum through their ETFs, offering a simple, regulated path for big money. They aren't touching the more speculative side of the market. On the flip side, the retail crowd is constantly chasing the next big narrative, jumping between meme coins, AI projects, and Bitcoin. which perfectly matches the report's findings. The report's mention of regulatory clarity being the main trigger for more institutional flow is the key. The ongoing discussions in the real world around new crypto laws show how much the market is waiting for clear rules of the road before the next major wave of capital comes in. When it does arrive, it will almost certainly target the established assets first, just as the video suggests. In the latest video from the Modern Investor, the host expresses a mix of excitement and frustration about the current state of crypto. He feels that the world is on the brink of accepting crypto in ways we never thought possible, yet the community's reaction seems quiet. He points to predictions of a $10,000 to $15,000 Ether and $1 million Bitcoin as becoming more and more realistic, especially with the idea of hyper-Bitcoinization, where Bitcoin becomes the foundation for everything. The host's excitement about crypto being used for mortgages is definitely understandable. The idea represents a huge validation for digital assets. It's not entirely a future concept either. Some specialized fintech companies have already started offering crypto-backed mortgages. However, the path for this to become a standard offering at major banks is filled with challenges. The biggest hurdles are the price volatility of crypto and the current regulatory uncertainty in the U.S. A bank would need very clear rules about how to handle an asset that can drop 20% in a day. The bill proposed by Representative Mace is a significant conversation starter, but a proposal is a long way from becoming law. While the host's vision of this being a world-changing event is powerful, the practical and regulatory steps needed to get there will likely make it a much slower process than many hope.